Type of life insurance products and annuity contract. Life insurance. There are two categories of life insurance. Term life insurance, short-term protection. Cash value life insurance, long-term protection. With savings components. Has cash surrender values. Term life insurance. Main characteristics. Temporary protection. Most are renewed with additional periods, premiums increased upon renewal. Can be converted to cash value life policy without insurability evidences. Attained age method. Original age method. Types of term life insurance. Yearly renewable term insurance, 1-year protection and can be renewed at the end of policy period. Term to age 65, protection until age 65, the time the policy expired. Decreasing term insurance, face value declines each year. Re-entry term insurance. Renewal premiums are based on lower mortality rates and the insured must provide acceptable insurability evidences. Return of premiums term. The premiums are reimbursed if the policyholder live longer than the policy term. Uses and limitations of term life insurance. Term life insurance is suitable when limited amount of income allocation for life insurance. Need for temporary protection. The insured wants to secure future insurability. Limitations. The premiums increase as age increases and will eventually reach undesired levels. Inappropriate if the insured wish to save money for future usage. Cash value life insurance. Main characteristics. Widely known as whole life insurance. Provides lifetime protection. When the insured died, the stated amount in the policy will be paid to the beneficiary. The policy ends once the insured died. Types of whole life insurance. Ordinary life. Limited payment life. Endowment insurance. Variable life. Universal life. Variable universal life. Current assumption whole life. Ordinary life insurance. Fixed premiums throughout the premium paying period. The policyholders overpaid during the early years, hence accumulating legal reserve and cash values. Legal reserves, excess premiums in the early years are used to cover insufficient premiums during the later years. Cash surrender values, received by the policyholders once they terminate their policies. The policyholders have the right to borrow the cash value or exercise the cash surrender option. Limited payment life insurance. Fixed premiums but are paid only for a certain period. A single premium whole life provides protection for a lump sum payment of premium. Endowment insurance. Pays the benefits if the insured died within a stated period. If the insured survived to the end of the period, the benefits will be paid to the policyholders. Variable life insurance. Fixed premiums. The reserves are invested in common stocks or other investments. Death benefits and cash values vary according to the investment experience. Cash surrender values are not guaranteed due to poor investment results. Universal life insurance. Flexible premiums. After the first premium, the amount and frequency will be decided by the policyholders. The protection and savings components are unbundled. The two forms of universal life insurance are: Option A, leveled death benefit during the early years. Option B, increasing death benefits. Universal life insurance. Flexibility of universal life insurance. Cash withdrawals are permitted. Receive favorable federal income tax treatment. Limitations. Insurers advertise misleading rates of return. Projections based on higher interest rates are misleading and invalid. Insurers increase the current mortality charge to recoup expenses. The policy lapses when the policyholders do not have a firm commitment to pay premiums. Variable universal life insurance. Most are sold as investments. Similar to universal life insurance except the policyholders decide how the premiums are invested. Minimum interest rate or minimum cash value are not guaranteed. Have relatively high expense charges, including front-end loads for sales commissions, back-end surrender charges, and investment management fees. Current assumption whole life insurance. Non-participating whole life policy. The cash values are based on the insurer's current mortality, investment and expenses experience. Surrender charge is deducted from the accumulation account once the policy is surrendered. Fixed death benefit and maximum premium level. Two forms of current assumption whole life products. Low premium products, with a low initial premium. High premium products, with a vanishing premium provision.